Now imagine if somebody has taken a trade and market completely reverses on him. Tell me the level of confidence a trader is going to feel. Top notch. Guerrilla tactics. It's all about quick entries and quick exits. This is probably one of the best methods to trade weekly options, because when you trade weekly, the game is different, especially for those traders who love speed, who want to enter into the market a lot without taking a lot of risk. No gas, no fluff, directly on the point, like always. Game of weekly options. Now, when you play weekly options, you're playing a different game. Before I tell you the strategy, in the money theta, it's always lesser. And at the money, the theta is maximum. So what does it mean? Is that we look forward to buy a weekly option where the theta is very less. Obviously, we look forward to buy an in the money option. In the money will have intrinsic value as well. We're going to use it very smartly to our advantage. And number two, we're going to sell expensive. Isn't this trading in a nutshell? Now let's learn more about this. I'm going to tell you a bearish example, bullish example, and towards the end of the video, I'm going to share you the practical tips, which is going to be really helpful for you if you love to conquer markets trading weekly options. So note down the steps very carefully. It is very unconventional, obviously. Now, market is currently 23,500. This is a live option chain. We look forward to buy the call first. We are only going to have 3 legs in this particular strategy. Number 2, sell a put, which is 1 strike down. Exactly like I told you, we are selling this because this one has really high theta, and you're trading weekly options. So that's good. Done. 2 things are done. And now the third step is we got to go in the money. The right side are puts. So we got to go in the money around 300 points, 250 points roughly, and we can buy a put. This put which we are buying is in the money. Strategy creation is just 50% of the job. Other things I have to explain you now. As soon as you do this, strategy will look something like this. As you can see, I've been getting a lot of requests lately that you want a strategy which is really conservative if things go completely wrong. Now here, suppose if market starts to go down, in that situation, how much loss are we having is roughly around 1,000 rupee of loss, versus if markets start to go bullish, in that situation, there is no limit to the profit, provided that market starts to go up. Now, market can only go down and market can only go up in that situation. Also, one thing which you must notice here is that it takes approximately 35,000 to 40,000 to 50,000 roughly. This is the range to create a strategy like this. The reason for such a low margin is that we are not doing any kind of a naked selling here. So margin calls and unlimited losses, it's practically impossible in this because losses are capped, wherein there is no capping when it comes to profit. Now, once we have this clear, certain things I want to show you, I want to tell you what to do if markets really go bearish. In that situation, first of all, is there any panic? I want to ask you. There is no panic, but the gap downs, which everybody is really afraid of, that is not a problem. Now I want to show you both the situation. I want to show you bearish, I want to show you bullish. I want to go one step extra so that you learn both the sides of the coin. And that's what the option trading is all about. So let me show you this. Now I'm going to show you a bearish example. The worst probably can happen is market start to crash. That's not much of an issue. Step 1, long a call which is at the money. Then we're gonna go 1 strike down and we look forward to sell this put. We are selling this obviously because we want to get theta. Once this thing is done, we want to buy a put now. So we go in the money and we buy this put, and our setup is somehow complete, and this is how it looks. Obviously market is gonna rocket down now, and you see that the losses are capped obviously, and this is the payoff till 6th. Now obviously we are not looking forward to hold it till 6th, probably exit intraday itself or max to max 1 day, 2 day, because theta decay is high, so high chances that we make good ROI, right? So this is how it looks right now. If I just change it, suppose if I want to do intraday, this is how it looks. Now you tell me, when you trade something like this, provided that the option pricing is correct, how comfortable a trader is going to feel. Let me tell you, The amount of comfort which you get when you have access to better techniques in the markets, there is no matching. Gone are the days when people used to do straddle, strangle, etc. Now here what we see is that it is already 10 a.m. now, and obviously market has gone down, but there is no issue and market is going more down. And how much are we incurring losses? Approximately 1,000 on a capital deployment of approximately 40,000. Remember, any other strategy could have given you major loss. Any selling strategy could have got you in trouble, no doubt about that. Plus, when market starts to go down in this situation, what you see is that loss is fully capped. We know that there is not going to be 1800 loss. If we just hold the trade till expiry, the losses eventually will come down to 15, 12, and we haven't even done any adjustment in this. We will do adjustment in this as well, but I just wanted to show you the worst situation. And then I'm going to show you good situation as well. Good situation is that market starts to go in our favor. I'm sure what you're thinking now, can you do averaging? Because even if market go down 10%, there is no problem. Can you do averaging? I'm going to have a good take on this. But now I want to show you a bullish situation. So what do we do? Step one, buy a call and sell a put, one strike down approximately. We do this. After this, we're going to buy a put in the money. In the money we go, we buy, simple. When you trade weekly options, it's much better to take position on a Friday, on a Monday, maybe Tuesday, because you need to give some room to market to move in your direction. If you do it on an expiry day when there are only 4 or 5 hours remaining, then the game is not really in your favor. You have to give some breather for market to move, and this is how it's going to look right now. As you can see, the payoff in all the weekly expiry is not going to be identical. In some weekly expiry, the payoff is going to be absolute blockbuster, like you just saw the last example. Wherein this bit which you see it's slightly different, but I must tell you one thing: the losses are capped. Doesn't matter the payoff. Also, what you see, the red zone here, which scare a lot of beginners, not the professionals, obviously. This is only there if you hold the trade till expiry. But are you holding the trade till expiry? It's a gorilla technique. You want to exit fast. You want to average fast. You want to do adjustment, you want to do adjustment fast. You are playing weekly options. This is like driving a car at 150 kilometer per hour. Now let's go ahead and let's see what happens with this. This is the bullish example. So market is gonna go up as I wanted to show you, and here we go. What you see is that it's making some amount of profit, some amount of loss, and that looks to be absolutely fine. And if we hold the trade, suppose for an entire day, how much it's going to be the profit? Let's see that. Now obviously I could have showed you expiry, which market moved up like 3% in 2 days, but there is no point for that. The point which I'm trying to make is little bit of fast move, much heavier profit. Now this 2200 is on a capital deployment of approximately 40,000. If you calculate the ROI percentage, easily it has given you 5% ROI plus when the market go into your favor, wherein when market doesn't go in your favor, how much it takes away? It takes away approximately what? Maybe 2%. But if I go ahead now, this 5% ROI can become a 10 or a 15% ROI in no time. But this is not one of those channels where I just show you the good parts of it. I want to show you the good part, and I want to show you the realistic part of it, is that what you can expect from the trade. That's how we break down the option strategies, and we really filter out, and we really know exactly what we are doing. If you've been trading in the markets from past few years, you know exactly what we are doing. Using very little margin, being fully hedged, no cap on the profit, but there is a capping in the loss. Payoff graph, even if market is in red zone, even if it moves a little bit up, there is no capping. Any kind of a gap up can give you relaxation. Any kind of a gap down is not much of an issue. Nobody breaks down the trade like we break down on this channel. And if you are somebody who's really serious about learning the top content, really the top shelf stuff, you can always get in touch, and the team will assist you, will guide you about the strategies which I call the top shelf. Obviously, I do not teach it to masses, because only people who are really committed to option trading and want to learn the strategies, want to learn the complete breakdown, the logic of the trade is the superpower which we have when we actually trade into the markets. And it's very easy to get access to that is just one step away. Now I'm going to tell you some more points because I'm sure you want to learn more about this. So time for VIP points, which you must know. Loss is fixed. So how about averaging down? Now suppose if I take a trade and market went against me, and that's totally okay. Now market has gone down. Suppose market gave a gap down of 200-300 points. That is okay, right? My loss is not increasing. I know it beforehand. Now what I can do is, can I average it down? Because is market gonna give me back-to-back gap downs and market becomes zero? I do not think so. So suppose if I can trade with 4 lots, I can long 1 lot. And I'm sure you know exactly what I'm talking about, right? But on YouTube, I have limitations to tell you whatever I can tell you. But I'm sure if you're smart enough in option trading, you can make really good things out of what I just told you. Now, when to do this? Now, a lot of people have, issue in getting to know where the market is going to go. I've made a video, just the last video, I think, RSI. That can be a really good help to you. You must watch it. That gives you direction, momentum, that kind of a technique. So you can definitely, if you are a beginner, even you don't need to remain beginner. They are just excuses. I mean, you can learn the better stuff, and immediately you get upgraded to better than the most traders who've been doing the strangle, straddle, jade, lizard, ironfly from 5 years and calling it an experience, wherein when you have better techniques, which is obviously lesser known, the profit booking techniques, the adjustment techniques, that really elevates a trader. That's why I say hit and trial way of trading one must completely avoid. You can elevate your trading game. You can learn the craft in record time. You can get in touch to learn in depth. Just drop a message. You can get details directly from the team. I'm sure you must have learned something new today, which you can bring into practice. And if I'm able to contribute to your learning, I'm really happy for that. Thanks for watching. And like I always say, you are going to do so well in trading, you will surprise everyone. I wish you all the best. Bye-bye.